Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a crypto highlight video. And if you're interested in any of the services I provide, please check out the links in the description below for the Patreon and Discord. Okay guys, so we're going to be looking at Uniswap. This was recommended to me by a member as well. So on the monthly, not much information here. It is at a pretty interesting level though. So we've, from the all-time high have sold off quite heavily, and we're coming into pretty much this original consolidation here before the major bull run Uniswap had. And right now it's been holding that consolidation, and it had a very nice powerful monthly candle buy up on July. And now we're starting to threaten the lows there. So I'm curious to see if we're going to have a monthly candle break under there and close. If that should happen, that should give us indication that the momentum is to the downside, and we're likely going to continue lower, breaking under the low of this wick here, this pivot, which is about $3.33, and that will likely get us to get all the way back down towards $2. So this is a pretty interesting level. I'm actually going to mark both of them on the monthly, and we'll make them red lines so we know that it's off of the monthly time frame. I think it's very, very important. And then we're going to mark this low right here as well. Okay, so we have this kind of general range here that can't really be lost if you want to have that continuation to the upside relatively in a shorter amount of time. Okay, this is the monthly, so this is going to take some time one way or the other, at least most likely going to. But let's go down to the weekly and see what what we're looking at. And before we actually do that, take a look at what the monthly just filled, this bullish fair value gap. So I'm not going to keep this on the chart, but I just wanted to show you. See, monthly came all the way down, filled out this bullish fair value gap. It's completely filled, had a closure under it, and now we're going to see, was that enough liquidity to grab to potentially, come up and make another run. Right now, the run is likely going to lead to a lower high from the all-time high. It's very unlikely that you have this breakdown and then this come rallying up, breaking this all-time high. It's more likely you'll have it come up, if we're going to have any impulse to the upside, and make a lower high and then continue lower. And then we'll see, will it become a bullish consolidation over a period of time, or will it just be a macro continuation on the pathway to zero and lower? Okay, let's take that off. Let's go down to the weekly, see what it's looking like. So weekly looks pretty good actually. So I actually like this consolidation personally. So this does give me some confidence that we may actually see a move to the upside here, which isn't surprising considering on how much it's dropped, right? So like I've said on the monthly time frame, a move up from here would make sense to fill out any liquidity above our head. And we have quite a few targets here on the weekly that we can look at. So we have this really nice fair value gap zone right here, this bearish fair value gap right there. So that's a level that I would look out for to get filled. And then you have, let's see, anything else, one right here. It's also pretty nice. This one's also untouched. And you have one right here as well. Okay, and these are all in very interesting places, because what you want to see for price to be delivered to an area, you need liquidity zones. You need places to where you can grab liquidity, and that liquidity is then used to push price in the direction that is being targeted, whether it's to the upside or downside. Now, if we're looking for downside momentum, well, after all this selling, it's very clear, as we can see from this consolidation, that the sellers are exhausted. Now, this doesn't mean they're about to lose the war, but they may have to give some battles up to allow the buyers, right, the money that wants to go up, to allow them to go up so they can start attacking and grabbing stop loss levels, buy stops. Okay, so you're grabbing liquidity above these high pivots. Okay, that's what you want to see as you get these fair value gaps filled. You want consolidations and high pivots getting their stops run, those liquidity zones all getting grabbed, which then, once you get enough liquidity, once you've actually accumulated enough power, enough fuel to continue lower, to then try and continue that macro trend to the downside. So we could be in the process of this sort of thing playing out. Now the next step would be the bulls who finally won a battle, Okay, they won a battle. They broke them highs. They're attempting to change the character on the larger time frame. Well, their job is now to defend the levels, to defend those levels, to make a higher low from the lows that they've started accumulating on. Okay, so that's how these charts work. I know it's a very simple way of looking at it, but that's how it is. All right. So I am looking at upside. I'm actually short term relatively. Again, this is all in the weekly time frame. I'm fairly bullish on the weekly time frame here. And what another thing I like about this chart is this consolidation here that I'm focusing on. So from the high pivot here to here, and then you have from here to here. Okay, so you have these low wicks, these low wicks here. This is a structure I like a lot, especially after a pretty aggressive rise. Okay, so this is what I like to see because it's a descending wedge or bull flag, however you want to say it. To me, it's not a flag, but it has more of a wedge structure in my opinion. And what I like about this is that if it does validate this structure, it's a continuation structure to the upside. Okay, so you have a nice bullish pullback, and then you break out, and then the way to measure these is pretty easily. So you just go from the high to the very low of the structure. So like right around, let me turn off the magnet here so it's a little easier to see. So right here, okay, and then wherever you may be breaking out, so from here to here. So it brings you towards filling out this fair value gap and then getting towards this one here. Okay, so let's say it's within 2 weeks we may potentially break out. Again, I'm not saying that's what's going to happen, just giving an example. You would be looking to fill out this entire fair value gap. If it takes longer, you're looking to just at least visit it. Okay, so that would be the full measured move of the weekly structure. So this is pretty nice. I actually like what I'm seeing on the weekly. Let's actually keep these trend lines here. Yeah, it won't be super clean on the daily, but that's okay. Again, they're just giving us a visual idea of what's happening on the chart. Let's go down to the daily, see if we see anything else. So the daily, actually we can actually use the daily, clean it up just a little bit. So we'll move that here, move this right here. So I'm a little OCD about this stuff, so I'm sorry about that. Like I don't mind it being a little messy, but it's if I can make it a little cleaner, I will. So right here. All right, so we can see more downside on UNI for sure as we're coming into these monthly levels, and then potentially respecting this descending wedge structure. So you may be coming back down to test out the low end of the structure, and if it validates, it should hold. The only time this can't go on for that long. All right, so you want about 70%. This maybe 75-80% of this filled. So coming towards around here, we should be seeing a breakout here at the latest, one direction or the other, right? There needs to be some sort of decision made by then. Once you start exceeding 75-80%, maybe even 85% of a structure like this, like a flag or a wedge, it becomes more and more likely they're not going to be validated, that they're probably going to get traded through, and there won't be any impulse in any direction. Okay, so we do want to see a decision made, but the probabilities in this structure are to the upside. So the probabilities are on the side in the short term for a move up. Now, I like also where we're building this. It's on these monthly levels. These are monthly support zones. So this is a very nice place to see this. And for the daily, I mean, we have some shorter term targets, right? So we have this fair value gap here within the wedge that you could look to be targeting to the upside. Right, so this is a shorter term target you can look to target, and then you even have this one that was newly formed just a couple days ago right here. Okay, so you have liquidity to the upside, and a lot of the liquidity to the downside has been grabbed. There is some more though right here. There's actually a really good one. So the reason why this is a really good one right here, so I'll make that green so it's clear, is because it's right under this low, so this low pivot zone right here. So if you come into this, you're likely grabbing any liquidity, any sell stops or any stop losses that are sitting under here and getting them out, squeezing them out. And that is a great sign to see if you want price to go up heavily. So if you're a market maker, let's say, and you need to deliver price higher, you're going to be looking to grab liquidity. And that's what these wedge structures are. So you see what the wedge structure is. It's not just lower highs, okay, but it's also lower lows, right? And every time you get the lower low, you're grabbing liquidity of people who went long, right? So you're seeing that you're likely getting more liquidity as you come to test out the low end of this descending wedge, grabbing liquidity under this monthly swing low, this monthly pivot as well, filling out this fair value gap. And you're also lulling shorts, right? So you're lulling shorts. Take a short here, take a short here, take a short here. So you're getting people to add on to their shorts, or you're getting them to become more and more irresponsible by making them take shorters at lower levels. That sort of behavior is what a market maker is looking to do, because it's going to help them deliver price in a direction. So once they grab the liquidity under here, potentially, they may have enough to then go up and now start squeezing these shorts. Start squeezing these shorts and potentially then validating this structure breaking out. Okay, breaking out the weekly descending wedge structure. And that's how these structures work. Okay, so I'm bullish. I'm bullish on Uniswap. Of course, don't go in 100%. It's not financial advice, just my opinion of what I'm seeing. And just remember that it's all probabilities. I'm seeing this. The probabilities are leaning to the upside, but there are plenty of times where it won't work out and it will go the other way. So you got to respect that. And every time you take a trade, expect that you're probably wrong. And if you do that, you'll be able to control your position sizing, control your risk, and you'll survive the markets long enough to actually make money in the long run, rather than just making money short term and then blowing up and doing that over and over and over again. All right, everyone. If you enjoy the video, make sure to leave a comment, give me a like, give me a subscribe, maybe a share or two. And if you have any questions, make sure to ask me in the comment section or in the Discord. You can find the link to the Discord in the description below. And if you'd like for me to do a highlight video just for you, make sure to become a member of one of my services. You'll find the Patreon link in the description below. I do a day trading, swing trading, and a tutoring service. So if any of those three interest you, make sure to join that. And if you do, I will do a crypto highlight video or a stock highlight video or a commodity highlight video if you want, just for you. Okay, everyone. Remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.